Hello, everybody, and welcome to episode number 115 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Wally Balls, and I'm joined here by my affluent co-host, former market maker, 20 years and current day retail trader, charming, witty, intelligent, humorous. He checks more boxes than a gynecologist. The infamous gorilla of Hell Street, JJ. How's it
Hey
going?
brother, how you doing? How you doing?
I'm doing good, man. I'm doing good, man. And our guest today is a research analyst within Bloomberg Intelligence. He's focused on the research of the broader asset management industry with specialized expertise in the coverage of ETFs, mutual funds, hedge funds, etc. He also works with Bloomberg's commodity strategist in the research of cryptocurrencies, which has helped him specialize in crypto and Bitcoin related fund products in recent years. I am talking about James Seyffart. James, how's it going, man?
Hey man, thanks for having me. Looking forward to this.
Thanks so much for joining us. JJ, I don't know if you know, man, we got a former track star with
Oh,
us on
Oh
the
wow,
pod.
you did your
okay.
research.
I did my
Okay,
research,
here we
James,
go.
man. We like athletes, man, on the pod, man. Just maybe tell us a little bit about your collegiate career, man, and just otherwise.
Yeah, I was a mid D distance runner, D3, so mediocre, but did it for all 4 years. So cross country, winter track, spring track, all 4 years of college.
Awesome.
Primarily the mile was my distance.
Oh, shout out to you, man. I long distance is never. I'm like a short distance guy. I'm a sprinter. Long distance is tough, man. It's a mental battle too, man. Like, you
It's
still
all mental.
it's all mental. Yeah. How do you actually? I try and do it. I try and do it now. I try and do a few miles, but you still keep up with it. You still run?
Yeah, I'm getting back into it again. I go in waves essentially. After college, it was like I'm not doing this for a little while, and I was injured, so it made it easy. But now I went for a run this morning. Nothing that
Yeah.
crazy, just 4 miles, but trying to stay in, try to keep some of the pounds off.
Absolutely. Absolutely. Good stuff, man. Good stuff. Yeah, so I figured we got you on here to talk some spot ETF primarily. I saw it and I didn't know he was gonna be in front of the Senate today. I think it was Gensler. Um I guess talking crypto. I'm not exactly sure. I mean, you might just telling us what this is happening today.
Yeah, it's just the senator basically asking. He's testifying in front of the Senate, so he's testifying on anything they've done with rule proposals across the entire like SEC landscape, and a really small subset was focused on crypto. There was a few questions, but he just basically dodged all those questions so far. He's mainly getting criticized pretty heavily for basically he's proposed the most rules out of anyone by far of recent chairmen, aside from stuff that happened under Dodd-Frank, which obviously had congressional backing, whereas all the rules his administration has
Mhm.
proposed are basically coming from him unilaterally. So something we're watching is like how much of this is going to get wound back at some point in the future because the Congress isn't backing a lot of these things, but time will tell.
Mm-hmm. What I guess what's been your whole take on his I guess general approach to crypto? I'm not sure how much of your own opinion you're allowed to give.
Say that question again. I can give everything is my opinion, so we'll just
Okay.
leave it at that. Yeah.
I just guess he's had some critics as far as I guess his approach to the just to cryptocurrency in general, from SBF, other things as well. I guess it's more of a general question, but do you have any thoughts on just how he's handled crypto?
Yeah, I mean, I've been extremely critical of the way he's done it. Like they've completely lost the forest for the trees. They're holding ETFs hostage for other rulemaking capabilities they're trying to do. And there's been some serious frauds that people in the industry have been calling out for a long time. Like, why isn't the SEC doing anything?
Mm-hmm.
They're starting to do it now. I mean, I don't want to get into like a huge argument, but like Hex and like Richard Hart, and there's these other things that are like blatant, like possible issues, and they're going after people like Coinbase, where it's like, come on, like go, like if you're gonna, I have no problem with them arguing with Coinbase and trying to figure out different laws and trying to silo things off. Because if you look at traditional financial markets, as you guys know, like things are siloed. Like you don't have a custodian that owns an exchange that also owns like all these other things, right? Like that's just
Exactly.
not the way it works. So like I can understand why the SEC wouldn't like that, but also at the same time, like you're doing that where people are like arguably much safer there when you're letting like
Yeah.
FTX and all these other like blatant fraud and schemes, pyramid schemes, things happen, and they're not doing anything about it.
Yeah, no, it's incredible. I've been thinking the same thing, right? Like the blatant frauds that they're not going after. I I assume you probably know more so than me. Assume there's political things, backdoor stuff going on, I would imagine.
Yeah, so he's definitely like part of the he comes out of the ilk of the left wing of the Democratic Party. Like all the jokes about him reporting to Elizabeth Warren, like there is some truth to them. He does like that is the side of the political party that got him into power. So he does report to them in a way. So like some of this stuff, like even if he was a fully like diehard crypto person, like he wouldn't be able to get those things through in under the admin that he's currently in, essentially. But no matter how you slice it, it's just been a hodgepodge of he's in my opinion he's fumbled the ball in multiple different areas here.
Yeah.
Do you think that's just because regulation, you know, crypto is brand new technology and the regulators are trying to regulate, Star Wars technology using, hammers and nails. Do you think there's a lack of understanding of how the technology works, which is why
No,
it's impeding this? No?
no, I don't. Like so like back in like 2017-ish time range, we had meetings with the SEC and like we weren't supposed to talk about crypto, but naturally it came up because Bitcoin ETFs had been denied and stuff like that. So, but like talking with people, even the staff, like they know what they're talking about. Like they were more
Okay.
knowledgeable than me at the time. So like
Okay.
they understand this stuff. I mean, Gensler taught an MIT class on blockchain technology and crypto. Like I learned from him, like watching some of those videos. I regret spending how many hours I did watching it, trying to like kind of assess what he might do when he came into office because it was the complete opposite of what I thought was going to happen.
Okay.
But like he knows how it all works. He knows the benefits,
Okay.
and like he's not wrong to say the place is rife with fraud and manipulation. Like there's that's straight up fact as far as I'm concerned. So people,
I've been around
yeah,
for 30 years, so anytime you introduce a new product or a market, of course, the people are going to be taking advantage of it, right? Especially in a market. I mean, 30 years ago, we used to all sit around and go, "Hey, could you imagine if there's something we could trade that's not regulated, what we could do with it?" Oh my God, right? I mean, like seriously, right? You
yeah.
take a couple
I
of
work with
billion
a guy
dollars,
who's I work with a guy who said the same
yeah,
thing. We started covering
yeah,
this in late 2017, and he was like,
yeah.
"Pardon me, like if I were younger, I'd quit and I'd go back into trading just for this."
Or even just issuing coins. I mean, we used to take companies public. Here, there's no disclosure, there's no registering of stock, there's no insider trading limits. None of that exists, right?
Yeah.
It's a complete Wild West market. So I'm looking at, okay, so now you tell us that the regulators are technically proficient. What about the people who control the regulators, the politicians? You think maybe that's where the bottleneck is?
No, that's part of the problem. Like with something I've been saying, and we've been saying in our research for a long time, this has become, like I said in the beginning, they lost the forest for the trees. There's a lot of they're trying to like fit into a political decision, what is a regulatory
Okay.
decision in many ways, in our view. So there's obviously some things that they're doing that make complete sense. Some of these rule changes they're trying to propose, some of the things they want done make sense. And then there's other things where it's like you are doing nothing but stifling everything. Like you can't, like they can't see the differences between like the things they're talking about. That said, it's all political decisions. So the only time that things are going to change is when it becomes politically untenable. But then again, like you have people like Elizabeth Warren saying they're raising an army of an anti-crypto army essentially. So like it's something that she's campaigning on. So like, can it be politically untenable if it's something that she's like really pushing herself and wants to be seen as because some people hate it? I don't know. But it probably is becoming untenable for Gensler in our view with all these court cases that he's losing in his administration.
Interesting.
It is interesting because we're starting to see some of the some like the political candidates are becoming like, I don't want to say they're running on pro BTC, but they're using that, I guess, as one of their talking points too. It's interesting. It's reached now into the political realm. I guess James, I just want to ask you just personally just about yourself, man. Like, was finance something that you always thought saw yourself getting into, or just just tell a little bit of how you got into the industry?
Kind of, yeah. Like there was always stuff like we talked about. I was a runner, so I kind of was interested in PT, but like not enough to go fully do it. And I like one of my things is like I always wanted to be in a role where like I could be competitive. So like I thought about teaching, but like you could be the best teacher in the world. You're not going to get paid anymore or do any better than the teacher right next to you who's the worst teacher in the world. So yeah, that's what basically led me here, and here I am.
And here he is. Yeah, that's cool, man. We find that with like a lot of people, like a lot of like former athletes, they like it because it's it's performance based, right? Like trading,
Yeah.
like doing these things is performance based, which is cool, for sure. So we just got to take a quick second here to shout out our good friends of the podcast, Apex Trader and Top Step Funding. Any listener of the podcast that has the skills to pass an evaluation can become a prop trader fully funded by either Apex Trader or Top Step Funding. Our own Micro E Futures trading community has many members who are now fully funded. No need to trade with your own money. Keep 90% of the profits. To learn more, visit our website at microefutures.com. So James, so for our audience who may not understand, what's the difference from the already approved Bitcoin futures trading product that they have, which I believe has been trading for some time now, and then now the pending applications that we have for some, for the spot Bitcoin ETF?
Yeah, so we basically have these ETFs that exist now for the most part, like to differentiate them, which I'm trying to decide how deep down this rabbit hole we want to go and explain the differences. But essentially, when you apply for ETFs, it's more than two, but there's two ways that you apply. One of them is under the 1933 Act and one is under the 1940 Act.
Okay.
All ETFs used to have to go through this 1933 Act process, which is like, if you've seen these deadlines, like the SEC is going to have to respond here on this deadline. It's either going to be a delay, deny, or approve. That's the 19B4 process. All spot Bitcoins have to go through that process because they don't meet the diversification requirements and other requirements of 40 Act funds.
Okay.
In 2019, there was this new rule. It's called Rule 6011. It's the ETF rule. Basically allows these 40 Act funds to go through a different approval process. So it makes it's a lot more streamlined. Basically, you apply, and as long as the SEC can't find anything that's like out of whack with like rules they've already set, or like they really don't want it to happen, like it's just going to be able to list. It's going to go effective, is the term, 75 days after the filing. So that's what happened with Bitcoin futures ETFs. Gensler gave a speech on August 3rd. Pro shares and other issuers filed like right after, and then they went live 75 days later. And that we were like one of the only people saying these things are going to go live. Like Gensler's not just saying we will look forward to these applications for nothing. So we got that right. So essentially the difference is those things hold futures, right? And futures, it's a regulated market. It's already it's on the CME, so the CFTC regulates that. And basically, I'm assuming most people know this, but like you rolling futures contracts, just a less efficient way to get access to these markets, right? Because you have to, every single month, you have to sell the current month contract by the next month. And if the next month is a higher cost than the current month you're in, then you have this roll cost of, because you're selling low and buying higher. And just over time that adds up. So like this year, it's like 7-ish% total that you're lagging spot due to both the fees of the fund and the trading and the rolling of futures. So like there's just a less efficient way of getting access to the market. So that's what we're talking about with futures ETFs, and spot would be just holding the actual Bitcoin in cold storage or whatever.
Because we saw that, Franklin Templeton, I think it was yesterday, they filed, or was it today? Yeah, they filed an S1 under the Exchange Act of 1933. So that is a spot ETF. Okay.
Yeah. So that's a spot ETF. Yeah.
So for the people who at home, because we're getting into, can you explain simply what a spot ETF is, like versus a futures ETF, just for the folks at home?
Yeah. So spot is just like, they're going to hold, I'll put physical in quotes, they're going to hold physical Bitcoin in some sort of cold storage wallet or with a custodian in this case, be it Coinbase, Fidelity, BitCo, Gemini potentially, institutional custody providers, and all it's going to do is going to hold the Bitcoin. Now, there's going to be ways that they'll differentiate each other, but essentially it's just an ETF. And the way an ETF works, for like those who don't understand, is it started, we'll take a step back and explain exactly how it works. So like the theory behind ETFs and why they were created were these things called commodities warehouse receipts. So basically, like you would store your gold in a vault, or you would store some other commodity, and then in return you would get a receipt from that warehouse. We're going to take care of it, and these pieces of paper are equivalent to X amount of bars of gold or whatever, what have you, and you would just trade those pieces of paper rather than moving the physical commodity around. And basically the thought process behind ETF is like, let's do the same thing with equities and bonds. So basically there's some underlying recipe for a equity ETF, and it's just like, this is the recipe to make the shares of the ETF. So here, get all these stocks in this proportion, and we'll give you 50,000 shares of the ETF. And at all points, those shares are interchangeable with each other. So you can either hand the shares, get back the underlying, or hand in the underlying, get back the shares. In the case of a Bitcoin ETF, it would be the spot Bitcoin. So you can either hand in Bitcoin and get back the shares, or hand in shares and get back the Bitcoin, right? So like that's the whole process. And what that does is it means, that's why Grayscale is such a broken product right now, because that mechanism doesn't exist. Because when you can always exchange the underlying for the shares of the fund, there's no way for to have like massive price dislocations. You'll have minor dislocations if there's friction to trade. So there's likely to be a little bit of difference between the price and the underlying value of the asset, and other avenues, right? There might be time lags, whatever. There's some minor things, but you're not going to get these 20, 30, 50% discounts like you're seeing in Grayscale, because once in an ETF, you can arbitrage that out. Like if the Bitcoin is worth way more than the shares are trading for, that out, right? You can make the profit of whatever that difference is. With Grayscale's products, you can't do that. So basically this Bitcoin ETF would be something that you could trade. It'll trade way tighter than even what typical spot Bitcoin trades at on like regular crypto exchanges. Like we're talking penny wide, 0.01%. So it's going to be like near zero fee to trade. So not only will it be zero commissions, but it will like trade extremely tight. So like even traders, I suspect, will really like to use this thing. Right now, BITO, the one we talked, the futures ETF, while I mentioned that it's lagging like 8% year to date, on a daily, monthly, weekly basis, like that thing trades like 99 point whatever correlated to Bitcoin, right? So like for traders, they love it. It trades super tight. It's penny wide, bid-ask spread. People love trading it for their exposure, but again, it's not a great tool for long-term holding. And ETF's biggest users are institutions and traders, but they're also advisors and individuals that want to hold an ETF for the long term, which is why we consider a spot Bitcoin ETF to be like the holy grail of this whole situation.
Yeah, cool, man, cool. Yeah, I mean, I guess the thing I was wondering, and maybe I'm wrong with this, James, but futures, like as a product, are more risky, correct, than I would think a spot ETF. I was just wondering why they would, SEC would approve a futures product, and maybe not a spot ETF, or maybe I'm off basis here.
So I don't know if I'd say definitively more risky. They're definitely more costly for the most part, because like I said, of the rolling the futures, they're also complex. Like people just don't understand them. So we have this system, we call it like the traffic light system, and we like give ETFs a green, yellow, or red light, basically. Like, and it's not like this is a good investment or bad investment. It's more like these are you could be subject to potential nasty surprises if you do this. Like gold ETFs get a green light, but they get a flag because they have alternative tax treatment. Like they're taxed as collectibles, which most people don't realize. They're not taxed like normal equity securities. And then we'll flag other things like, oh, it's equal weighted, not weighted by the market cap. And then we'll look for price dislocations. This thing is subject to price and NAV dislocations, which often happens with international ETFs, right? But the biggest red flag for us are, one, leverage, which a spot Bitcoin ETF wouldn't have, but two, it uses derivatives and futures to get the exposure, because you are subject to serious roll cost potentials when a futures market goes into contango or backwardation. So like, it's funny, like BITO gets a red light in our system, but like a spot Bitcoin ETF would get a green light with literally no warnings, because it doesn't have any tax issues like a gold ETF would. So like it would literally get 0 warnings and a green light in our system. So that's the way that we tend to look at things, because obviously like a VIX product, right? A volatility ETF, like that's not like we would never say like that's something clean that like your grandmother should be investing in. But if your grandmother wants to bet on the volatility of the stock market going up, it's like a perfect vehicle for her to do that. Right? But like it's not a good long-term vehicle. And that's the same way that we view BITO. Like it's, if you want to get a short-term, relatively medium-term exposure to Bitcoin markets, you want to trade Bitcoin exposure, BITO makes complete sense. Long-term, it's just less efficient than what a spot ETF would be.
Cool. Thanks for breaking that down. So, so James, who are some of the large funds who are filing for spot ETF?
Oh, but I mean, I could list all of them, I guess, but like the main ones are like, so we have BlackRock, you have Bitwise, you have VanEck, you have Invesco, who's partnered with Galaxy on this. We just had Franklin Templeton file. There's Hashdex. Hashdex actually has a futures ETF. So I talked about those futures ETFs launching. BITO launched their 40 Act. They launched 75 days after. But there's also some inefficiencies with 40 Act products. Like, yes, you have futures ETFs, but part of the problem is when you roll those futures, I talked about like selling them, right? When you sell them at a profit, you have to distribute that because they're pass-through entities. One of the benefits of the way that DeFi is structured, which didn't go under that 40 Act process, it went under that 33 Act process. And so essentially what they can do is they don't have to distribute those dividends. So you've probably seen charts where people are like, oh, the Bitcoin futures ETF is underperforming spot by like 30%. Like Michael Saylor just tweeted that out recently. And like, that's not how it works. Like you have to look at the dividends when you're comparing the total return of any sort of product. So But DeFi doesn't have to do that, but you have what's called a K1. And basically it structures a partnership and you can you don't have to distribute it immediately. So it's a little more tax efficient in the structures, particularly if you're investing you want Bitcoin futures ETF exposure in a taxable account. But some of the other ones out there, Global X is filed, Fidelity, obviously, Wisdom Tree, and then ARK is partnered with 21 Shares. So 21 Shares is like, I don't think they're the largest crypto ETF issuer, but they have the most products and they're all over Europe, primarily in Switzerland. And I think that's it. Did I say Valkyrie? I think I said Valkyrie. But yeah, we're at like a lot of different people trying to launch these things. We're at 12 if you include Franklin. And then there's also 3 Ethereum spot ETF proposals.
Yeah, that's interesting. I was going to ask you about that. Do you have any leanings on Ethereum, like the chances of that getting approved?
So Ethereum futures ETFs, there's like 16 applications right now. They're getting approved in October. They're coming to the market in October for sure. We're like 95% on that outcome. For spot, I'm kind of waiting to see what happens with spot Bitcoin. We're at like 90+% that we think it's going to be approved by the end of 2024. And 70-ish, 75% that we think we could see approval for a spot Bitcoin ETF in 2023. But that's like a very flexible number for 2023 because like we're still waiting to see what happens with that Grayscale court case. So Grayscale won over the SEC, basically said the SEC was arbitrary and capricious in approving Bitcoin futures ETFs and not Grayscale spot application. So we're still in this like limbo zone where we don't know what's going to happen. And Carrier's just testifying in front of Congress, and he basically avoided any questions on the Bitcoin ETF by saying like they're still looking at reviewing the court's decision, and we can't talk about ongoing litigation. So like we didn't get any. I was hoping we might get some sort of answer from Gary on that, but he basically sidestepped the question completely.
Mm-hmm. Yeah, I think you answered this about the custody of Bitcoin, and so it would be with like a Coinbase. I think you even mentioned Gemini, so we would be with one of these one of the exchanges.
Yeah, so like there's all these at BitGo. I wouldn't be surprised if we saw BitGo as one of the providers. I mean, after the news was first Fortress, I don't think Fortress will be a custodian for any of these ETFs or Prime Trust, but like it's going to be these more institutional grade. And Coinbase and Gemini, they are some of these other guys. They're custodians for other institutional funds and even Canadian ETFs. They're custodians for some Canadian ETFs. So like they are already doing this essentially, and they're ready to handle it. But yeah, they would be the ones holding it. The one thing that we think that the SEC might be able to lean on in denying these after they've had so many of their reasons slapped down is possibly saying they're trying to issue these new custodian rules, and then we think they could lean on that. But even then, that would probably subject them to another lawsuit. Because basically you spent 14 years denying these things, and all of a sudden now that all of your reasonings has been shot down by the court, you're going to come up with another reasoning. So yeah, our litigation analyst Elliot Stein thinks that if the SEC does that, it's basically a delay tactic, and they know they're likely to lose in court, but it still like would be a way for them to keep delaying and kicking the can down the road on allowing these things to get to market. And on Ethereum spot, I kind of didn't really fully answer. If we see a spot Bitcoin ETF approved, and Ethereum futures do indeed launch in October. Those Ethereum proposals are due at some point in May of 2024, so May 23rd-ish, I'm guessing. So mid to late 20s of May. I'd be surprised if the SEC denies an Ethereum spot application after approving futures and if they approve spot Bitcoin. But we need to see what happens over the next few months. But I think if those two things do happen before May, it's likely that spot will be approved in or around May.
Interesting. So I had a question from a listener. They wanted me to ask you, would there I don't know if it's proposed or maybe we could see this down the line. Would there be like an ETF with maybe some of the BTC related stocks involved in it, or just so far it's just
they're out there.
Oh,
they're already there. Yeah, there's so like Block from Amplify is the first one. I can rattle off a whole bunch if you give me 1 second, but Block from Amplify is the first one. We call those thematic crypto funds or blockchain funds. And basically they came about back in like 2017 during the heyday of that 2017 bull market, trying to basically get people exposure. And a lot of like even advisors and people, like if they kind of want exposure and maybe they don't want to actually deal with the actual physical asset, but they just want some sort of exposure, there's some minor ETFs. So it's kind of like investing, like you want exposure to gold, but like you're just going to buy gold miners. That was the way you used to do it before a gold ETF existed. And that's kind of the way that we're looking at these. But there's about $1 billion in assets in these products. So yeah, we have like Amplify's Block, First Trust has one LEGR, then Bitwise has BitQ. I mean, there's like 15 of these funds that do something like that, where they invest in equities that are related to it. There's also been a bunch of them that have closed. So there's 1, 2, 3. There's been 4 ETFs that did this that have closed because they never got enough interest. Basically, it's commanded by Block and at 462 million right now in assets, and then First Trust has one that's just over 100 million. So they're not getting super high levels of interest from investors right now, but they have meaningful assets and they're profitable funds.
Cool, good stuff. Yeah, it'll be interesting. You think we see an I'm never into asking people price predictions and stuff of that nature. And I'm not going to, but I think a lot of people would assume this would be a good catalyst for Bitcoin, maybe just crypto in general. Are you on that side, James?
Yeah, so I'm actually not even allowed to say that, but I like to give a price prediction. But the way I'm looking at it is like it's way more complex than most people think about it, right? Like, yes, the indication here is one, most people who want access to this stuff already have it in a Coinbase account or a Strike account or Gemini or what have you, right? Like if you really wanted exposure, you already have it for the most part.
Yeah.
The people it's really more about like what this indicates, like the SEC acceptance and approval of these products is a big deal. Right. And then the people that this really helps are advisors. So if you're an advisor and you have a client with, I don't know, $10 million in assets and they have like a few 100,000 in crypto on their own account, it's not under the umbrella that you can charge for. And you also don't know exactly what they're doing as you're trying to get a full financial plan. So like there's all these other benefits of like an ETF launches and it's a way for them to like actually maintain the client's crypto exposure and charge money on giving that exposure out, right? And then also institutions, there's a lot of institutions, pensions, endowments that are restricted from buying certain things. A lot of them you can only buy securities, right? Bitcoin is not a security, so they can't expose it, but if it's wrapped in an ETF, it is considered a security because it's covered by the SEC. So like there's other institutions that will gain access. So like there is some benefit here and some potential new investors. But the other part of this is like if these are approved, Grayscale GBTC owns 630 something thousand Bitcoin, like 3% of the current supply roughly. And all of a sudden this thing is no longer, those Bitcoin are no longer locked up. Like it's not as clean as like this is an automatic, like
Sure.
It's a net positive over the long term, but like what happens in the short term, particularly when GBTC unlocks all that Bitcoin, who knows? Like I'm of the camp that like there's some people that think it's going to go down, the assets are going to drop like 70% because everyone's fed up with Grayscale. I don't think that's going to happen. There's going to be taxes that come due if you do that, especially if they lower their fee like they say they're going to. I think people are going to be more likely to stay than a lot of other people are expecting, but it's definitely not as clean cut as a lot of people like to say.
Sure.
Act. You got to remember, it also opens the ability to short, right? So futures kind of did that. It's easy to short. It's not as easy. It's not very easy for like a retail investor to short Bitcoin. There's an inverse ETF now, an inverse Bitcoin futures ETF in the US, and there's stuff internationally, but it's like not the easiest thing to do. A spot ETF would open other people to get on that side of the trade.
Sure. That's a good point. You know what I think too, JJ? It's like see the thing with Bitcoin, like you can't like dilute, like they can't like dilute the shares, like other
like we're used to.
Yeah. So, but yeah, no, it's interesting.
Yeah, you're not going to have issues like you had with FTX where they say they have X number of Bitcoin and they have like way less. Like that's just not going to happen with an ETF. Now, theoretically, could they like, I don't know, lose their keys or something? Yeah, but it's not going to be the same sort of like paper Bitcoin trading. I do think people will complain about it. Some of it, there will probably be like some creation for redemptions that will happen with futures. Hashdex's application. So like the way that they're going to get exposure. So they're going to hold futures and spot. And basically the way they're going to get exposure to spot is by exchanging those futures, basically letting the futures settle in spot is a way to think about it, or exchange for physical, where these futures are equivalent to 5 Bitcoin or 1 Bitcoin, and I'll exchange you 10 futures for 10 Bitcoin. And that's how they're going to get access to spot, which like a lot of the SEC's concerns have been like manipulation in the underlying spot markets, and Hashdex is like, fine, we won't touch them. We'll just do it on the CME, which is a regulated market, and we'll just exchange futures for spot. And there's no like price that's happening there because it's like we're exchanging this for that, and there's no like price exchanging hands here, and it's happening on a regulated market. So like the way Hashdex is doing that is kind of like very interesting to me, because like if the SEC really wants to find ways to deny these things, they could lean on different things that would probably subject them to being sued. But like if they deny Hashdex's application, I can't wait to read that denial letter if it does happen in May, because it'll just be so utterly fascinating.
Hmm.
Yeah, that's the
Interesting.
nice thing about crypto is there's no dilution, as you know, when you get public companies and you know the companies are issuing. My big pet peeve is stock-based compensation. Like you see these poor shareholders, they don't even know what SBC is, and you see these companies that put out S8s that are like that could choke a dinosaur. You know, you really need 1 billion shares in employee incentive compensation, like 1 billion share S8. Is that really necessary?
I know people
You
always
know?
complain about buybacks and they don't realize like that there's like two sides of this coin here. Like
Yeah,
they're
like,
doing both of these things. Yeah.
yeah, and then of course everyone then becomes a consultant, like the CEO's girlfriend's brother, you know, is a consultant, and you know he's got paper. Everyone's getting paper, right?
Yeah, yeah, yeah.
It's beautiful if you're on the receiving end. I mean, I lived off S8 stock for 10 years. Yeah, I've never bought stock in my life. It's always been given to me. I don't know why anyone would, but you know, it's for retail people. It's horrible. You know, someone's just diluting the crap out of these things. So that's one thing I like about the crypto markets, because there's a set amount of supply and they can't create any more. Hopefully.
Well, I mean, for some of these
Yeah,
assets,
yeah,
that's only
yeah.
true for a subset of them. I would say that I would say a majority of them wouldn't be classified as that, but I think
Yeah.
most people are not interested in those other ones that we're talking about. That goes to the rife with fraud and manipulation side of things, I think.
Yeah, exactly.
Yeah, absolutely. James, you mentioned something about losing the keys. Has that been any chatter? Well, because that would be pretty disastrous, right? If a fund's holding like a large amount and they somehow lose the private keys, or
Yeah, so there's like insurance policies that you can read. Like you read, they have insurance policies in case of things like that. They disclose that that's a risk that they could lose some of this, or like they disclose like people saw if you've looked at any financial documents, like a specific, the amount of risk disclosures in there of stuff is just insane. So when iShares first filed, people thought it was an ETF. They're like, it's a trust, not an ETF. And then you had all these people like, look at this risk disclosure. They're talking about forking Bitcoin, and it's like, no, they can't not. This would not get through and propose. Like they can't just not explain anything about what a fork is and like the risk of like choosing the wrong fork. That's basically all they were doing. And people are like, they're gonna fork Bitcoin and kill it. Like that's gonna be BlackRock's goal, which is absolutely not the goal whatsoever. So yeah, it just goes back to like all these different risk disclosures. So there'll be disclosures about potentially losing access, all these different things, and it'll just be like this is a potential thing that could happen, and then it will say like there'll be some like underlying language about like how they're going to handle it. They'll have insurance policies in case that comes out to pay people out, things like that.
yeah, man, that would be a disaster. James, I guess I really haven't asked you any of your personal stances on crypto, Bitcoin. I would assume you're pro Bitcoin, right? I mean, I don't want to assume, but
Yeah, personally, we try to stay like kind of like indifferent, I guess, but no, I
sure.
am definitely lean on the pro side, but I also like am quick to like call out things that are like obviously obviously bad. But like I'm more of the opinion that like the SEC is a disclosure regulator, which is something that Gensler will say repeatedly. But a lot of the things they've done recently have shown that it wasn't disclosure, it was merit-based, which they are not a merit-based regulator. They are not there to say like this is a good or a bad investment. They're just there to like, these are disclosures, they want everyone to expose those risks that I just talked about. Like that's what their mandate is. And it's my view that they've kind of gone over that a little bit with some of these things they've done in the last few years. The flip side of that is honestly, if they had allowed GBTC to convert into an ETF in 2020 or 2017 or what have you, we might not have caught all the fraud and manipulation that was happening with FTX and 3 Arrows Capital and these Voyager, Celsius, all this other stuff. Like GBTC was at the center of a lot of this that caused like this domino to fall of these people doing really sketchy things in the back end. So that was a net long-term positive, however painful it was at the time for people in the space.
Mm-hmm. Yeah. Are there any particular, crypto or blockchain applications that you think make sense that maybe like you're excited about for the future?
On the fund side,
Just crypto in general, like blockchain tech, or are you anything that stands out to you or not really?
so I listen to a lot of stuff, so I don't want to pretend like I'm an expert, but I listen to a lot of the different podcasts and spaces and things like that.
Mm,
But for the most part, I tend to like really just focus on looking at what's going on with Bitcoin and
okay.
Ethereum,
Mm-hmm.
largely because that's what our clients at Bloomberg are most interested in when I talk to them. And also that's kind of like the more set and grounded path. A little bit stable coins as well. I mean, the one thing I would say on that front is like a lot of Bitcoin maxis will talk about like Bitcoin is the future, stable coins are nothing, but like they have found product market fit. There's no argument at that anymore, as far as I'm concerned. Like they found product market fit, and that's like arguably the only thing in the entire space that has found product market fit, aside from degeneracy and gambling. Nothing to say that that won't happen, but yeah. So I tend to focus mostly on Bitcoin and ETH, and largely because that's what my clients are most interested in. And that's where most of the capital is, right? That's where the market cap is.
Sure.
So those are the areas that I focus on.
Cool. That's really cool to hear that. I wasn't sure if there was interest in Ethereum. That's pretty cool to see that a lot of clients are pretty interested.
I would honestly say that I get like, no, I get most questions about Bitcoin, but you'd be surprised. A lot of people are there's a lot of ETH maxis out there, particularly in finance, because they like the things they could do with like smart contracts and like just writing things into the financial side of things, as much as it's been kind of a joke with some of the the hacks and different things that have happened and just obvious flaws. And as far like if you're from finance, like sometimes you look at some of these things, and I've seen some of these like this money got hacked or this was lost, and you're looking at it like, how was that just like allowed to happen? Like as somebody in finance, like that's like textbook 101.
Exactly.
But here but here we are. A lot of it is like these are tech guys like trying to reinvent, and they think that they know better than TradFi, and they make like the same mistakes that people in TradFi were making 60, 70 years ago. But
clearing and custody is always it's an interesting thing. It's a lot, most people don't even think about it, but the plumbing that allows a market to work of the clearing and custody system is that must be something else for this Bitcoin. I can't even imagine.
so yeah, so actually like one, yes. I mean, I think a lot of people realize how complex it is with the Robinhood debacle with it, with GME, with GameStop and AMC. Like people were like, "What do you mean? Like this is not like, yeah, there's like a time between these things that settle. Like, and then there's money, and like people like just had no understanding of at all how that works. So I think some people have more understanding now. Other people just think it's a complete conspiracy. But like that, the settlement. That's why I kind of highlighted Hashdex before, because they've kind of fixed the settlement issue. So if the SEC wants to come back and say settlement, the fact that they're settling with CME exchanging futures for spot, and the fact that it's on CME, which is a regulated market already, like kind of settles any issues that the SEC could then bring up. Like, well, we're worried about settlement and exchanging of hands and money going over to the Bitcoin network, what have you, right? Like if the SEC says that's what their concern is, one, I would say we have tons of spot ETFs globally, and they have no hiccups. We've seen multiple bear markets, 80% drops, and those things traded tight as can be, traded in line with the price. I mean, there's an FTT ETF that went to zero, and it still traded super tight as that thing was collapsing. So like the ETF is just an amazing technology and structure. So like it'll clean things up essentially, but the Hashdex one kind of settles some of that settlement issue. So it kind of only really leaves the questions like if the SEC really wants to harp on something, it's custody, or if they really are risky and want to risk it, they could go back and like say they really do think there's still fraud and manipulation in the spot market and go back to the court. But I don't even know how they would come about doing that. The court has basically said that argument is dead.
Yeah, I guess then they'd also have the burden of proof, right? So yeah. Interesting.
Yeah, part of the problem with the fraud and manipulation thing is like they're asking people to prove it's not happening, and it's kind of like, well, prove to us that it is happening in this market, and the SEC isn't doing that. So I think that's part of the reason. So maybe if the SEC comes back and says with proof that this is happening and these are manipulated, what have you. Which the one area where like I would throw up like a red flag is that DOJ and SEC situation with Binance, like all that's under seal. So if something comes out under there where they can prove that there was manipulation of the underlying spot market, all of a sudden it might make like that loss that they took to Grayscale a little less. That's me like putting on my potential tinfoil hat. Like if there's one area of concern, like that would be the one area that they could find it.
Okay,
It's
interesting.
fascinating to see something new roll out like this. The genesis of a market is very. I always find that fascinating.
Yeah, for sure, and that's why we want to get you on here, James. That's it for me. JJ, do you have anything else?
I'm good. I'm an old guy gouger, so this whole Bitcoin thing is I'm still learning every day as I go. But I find it fascinating. It's and thank you so much for being here and sharing your knowledge with us and educating us. We really, really appreciate it.
Yeah, happy to do it. This was fun.
Absolutely, James. And just to just ask you, because I just to clarify, because I know you said a little bit earlier, I forget the numbers. You said 90% sure. You said this would pass by what date? Just curious. Not I'm not pinning you down.
No, it's fine. No, yeah, pin me down. It's fine. We throw it out there.
Yeah, just curious.
End of 2024, we're over 90% that this should get approved.
Awesome.
But we change our stuff as things happen, right? We've gone up, we've gone down, and we're around 70, 75 that we think it could happen this year. But again, we're waiting to see what happens with that Grayscale decision. So like if the SEC comes out and basically says we need 90 days, or like we have to review this more or request certain days, we don't know what's going to happen. So like October 13th is the deadline for the SEC to basically appeal for an en banc hearing. So basically appeal the decision. And then right after that, the 16th, 15th is when all these decisions, all these spot Bitcoin applications are due for another one of those delay, deny, or approve. So it could be like a sweet spot where the SEC is like, all right, we have no, all of our defensives have been broken through. So we're just going to approve these. Now, I wouldn't say it's, oh my God, this is highly likely, but certainly possible. And then ARK in 21 shares is due on January 10th, 2024. So that's the final deadline. And if that is denied in January, I would say the odds of 2024 just goes down a decent amount, because I can't see them denying that in January and then approving a bunch of stuff in March. The only way I could see that happening is if they deny all the applications aside from hash dexes, which is that one that I talked about, where they just do like the exchanging futures for spot, which again is like, in my opinion, losing the forest for the trees, right? Like it's way too much. But that's the only way that could happen. And then, like I said, if that doesn't happen, I would just love to see specifically a denial letter for that application from Hashdex, because they went like a real novel approach to try and answer any of the SEC questions and work with them. Whereas some of the other issuers are basically like fighting with them, obviously, as Grayscale did, and they won in court. So yeah, those are the dates to watch essentially. Cool. And then we will see ETH futures ETFs launch. The first one will be Valkyrie will have a fund. They have a Bitcoin futures fund now. And it's going to trade from just Bitcoin futures to holding Bitcoin futures and Ethereum futures starting like October 3rd or October 4th. Bitwise will do the same thing. And then we should see the first full-blown Bitcoin Ethereum futures ETF launch on October 12th from Volatility shares. So those are coming to market. We're like very confident in that. So we'll eat crow if we're wrong on that front.
Yeah, awesome, man. Thanks so much, man. I'm excited for that Ethereum too, man. I'm pumped to hear that. That's awesome, man. James, thanks for educating us, man. It's been a pleasure. Appreciate you going into detail for us. And that's going to conclude today's episode of Confessions of a Market Maker. If you guys enjoyed this episode, please rate and review it for us. If you'd like to join a supportive and professional community of traders, you can join us at microefutures.com. James, let the listeners know where they can find you and anything else you'd like them to know.
Yeah, so if you're a Bloomberg Terminal client, where I'm very available to have any conversations that you might have on Bloomberg IB or message or what have you, so feel free to reach out. Otherwise, my whole team and I are very active on Twitter, so my handle is JSEYFF. So you can reach out to me on there, always commenting on this. And the one thing I would add is like, we have a team of people that like cover different markets. So we have a litigation analyst covering this from that perspective. We have a policy analyst in DC who covers this and knows everything about going on crypto. We have people covering bankruptcy law, covering Coinbase from an equity analyst perspective. So I have a group of people like around me, not like I'm covering mostly the fund side. So I give my input from what I'm seeing and I get input from everyone else. So there's a whole team of people behind like my views and my thoughts. It's not just like, this is my personal perspective as much as most 90% of it is. There's a lot of input. There's a huge team of us over here at Bloomberg.
Yeah, that's awesome. That's awesome. That'd be great to have access to. Shout out to you guys doing great work over there. So
yeah, if we get it right, it'll be great work. We've gotten a lot right so far. So we'll see over the next 9 months, and then maybe we can talk about whether or not it was great work.
Well, we're in a game where we're dealing with probabilities here, right? Not certainties.
Yeah,
everyone's gonna get something wrong. We won't hold that against you, James. So for James Seyffart, I'm Paulie Walnuts. He's the gorilla of House Street. You stops though.